the channel. Welcome. So today we are going to be looking at what we call highs and lows. Okay, it's a market structure concept. So before I move on to explain what highs and lows really mean, okay, I would first like to explain what market structure is. So market structure is a topic that I normally discuss more often because that's my style of trading. So market structure is the strongest foundation of technical analysis. It is the breathing pattern of the market. Okay, so understanding the simplest yet harder concept of the market structure, which are higher highs, higher lows, lower highs, lower lows, is contributing to the 80% and even more to your of your profitability. So this concept is entirely based on your understanding of your highs and your lows. How well you understand the concepts, how well you are able to identify your highs and lows will really help you. But today, under this market structure, we're going to be discussing the highs and the lows. All right, the strong, weak highs and lows of the market. Okay, so before I actually begin to explain, let me make a simple illustration. Okay, so we know that market moves in a wave kind of structure. Okay, in a wave kind of structure, and as it makes these waves, it forms what we call highs and lows. And if we're able to understand these highs and lows, market becomes very easy for us. All right, entries and exits become very easy for us because actually this is what has made my analysis become much easier because of movements like this or concepts like this. Okay, let me just add one more and we're done. Fine. Okay, so let me give this as an example. All right, so as you can see, this is an illustration I'm trying to make. So if you look at this side of market, this is an uptrend side of market, then we have a downtrend side of market. Okay, and in each of these you will notice that market keeps on making repetitive movements, same structures, same things that are happening. Okay, and as it is making these moves, you notice that it keeps on making what we call highs and lows. So this is our high right here, this is our low. So market firstly trades from a low to a high, then back to a low, then back to a high, just like that. It keeps on making this move, not until we have what we call a break of structure. Okay, so we have what we call a break of structure right at that point. Okay, so not until we had a break of structure. All right, but before that break of structure, market kept on breaking structures on this side of market. So let's mark this. Okay, so let's mark that. So on the highs on this side of market, you will notice that market kept on breaking structure. So what we have here is a break of structure. A break of structure is simply a break of either a high or a low. So as you can see, market, like we said, market trades from where? From a low to a high, then back to a low, then to a high. So you will notice that this high here has been broken, and as it gets broken, another high forms above it, and another high forms above this high. So we have this high that forms there. Then as this move keeps on going, we notice that the lows below are maintaining. Okay, the lows are maintaining. So this is where the concept of strong highs and lows comes in or comes from. All right, so the side of market that is breaking is simply the weaker side of market. So when our highs are being broken, we call them weak highs. while our lows are being maintained. So the ones that are maintaining, which are the lows, are what we call strong highs or strong lows, sorry. So the lows down here, okay, so let me mark this, is do this. So I'm going to call them strong lows. That's too much. Okay, so let's call them strong lows and put them right there. Why do we call them strong lows? It's because they maintain, they never broken. Whatever swing high or low that never gets broken is a stronger one. Okay, so that is the concept we're trying to bring out here. I'm trying to explain in a way that even a 12-year-old can understand. Okay, another strong low. Okay, we have another strong low. Where is it? It is here. All right, then where are our weak highs? Our weak highs are the ones that we see them get broken, so we'll call them weak highs. All right, so there is our weak high. Okay, let's mark our last one, weak high. We actually have 3 of them, so there is another weak high. Okay, why? Because structure broke on that side of market. Okay, another one there. So let me just mark this. Okay, there we have our what? Our strong highs and weak high. So how do you define a strong low, a strong high, or a strong low then? So in a case of a strong low, we are saying a strong low is a low that has broken structure to the upside. Okay, structure has been broken to the upside, which is the upside is which side? This side of market. Okay, to the upside, and has created a new confirmed higher high. Okay, these are the higher highs, these are the higher highs, which apparently are our what? Our weak highs. Okay, strong high, market gets broken on the what? On the other side of market. So now let's take a look at our strong highs. Now we are looking at these. We've looked at the strong lows. Let's look at the strong highs now. So if you look at this side of market, where market is moving downwards, the downtrend, you notice that the upper side of market gets maintained while the downside of market gets broken. So now, what is our definition of a strong high? Our definition of a strong high is simply that a strong high is a high that has broken structure to the downside and has created a new lower low. So this is our new lower low, and market has done what? Broken to the downside. So this is a downside where we see market break. Okay, so this is the downside. Okay, let me just make sure we mark, very important, so that we do not miss out anything. We do not miss out anything at all. Okay, this word. So let's just drag this here. So our low, we're trying to mark our low. Okay, so this is our low that gets broken right at that point. make sure you mark it very well. My mouse is tripping, apologies on that. Okay, so yeah, there you go. Okay, then we have another one. So we notice that market keeps on breaking. We notice that this low was broken and that low gets broken, thus has having strong highs on the other side of market. So our strong highs, will mark them on this side of market. We'll say we're going to say strong at let me just do this. Okay, just trying to make sure I mark strong high. Great, there you go. So here we have our strong high right on top. Okay, another one. Another one here, so we actually have two. Okay, so we have a strong high, then our weak lows, weak lows to the downside, just like our definition is. So this is an illustration. This is how market moves. This is our weaker side of market and our stronger side of market. So what is the whole point of us trying to understand this? The whole point of us trying to understand this is so that we know where weakness and strength lies on the market. Once we know this, it gets easier for us to know where our entries should be and where our exits should be. And the other thing is that whenever we are trading uh under this concept, or while using this concept, we must always know that we trade against or away from strong structure towards the weak one. So we are trading from strength towards the weak. If you look at this market right here, we know that this is a strong side of market. So we must already know that our entries must be on the strong side of market, and our exits, or rather our TPs, must be on the weaker side of market. So we can make a trade from right at this point and place our TP right above the breakout structure. Here we know that, okay, as market moves, automatically we have to see a breakout structure. We have to see market break the previous high. So we'll put our TP right there, somewhere above the previous high. Same here, you can enter your trade here and place your TP somewhere above, slightly above the high, because you definitely know that market must come to break to us to break that high so that a new high can be formed. Okay, so it gets easier for us. We know that that is how we must trade. Then here we have a breakout structure. You know what a breakout structure is? When we see that the strong low gets broken, we already know that we should know that market is simply trying to change direction. All right, a change of environment. Market is about to change from an uptrend to a downtrend. We can call that a change of character as well. Okay, so now if we were to look at let's try to look at the real market now. Let's try to look at the market. All right, so let me just remove this. Let's try to have an example, something that is real. Let's try to look at the real chart. We have made an illustration, so let's try to apply our concept. So the concept normally is used for entry and exit purposes. All right, under market structure, whenever we are teaching people on how to enter and exit a trade, normally we add this concept. It's important that the trader knows where strength and weakness lies, so that it's easier for them, it's very much easier for them to know where to enter and know where to place their stop losses. Okay, so let me just place in my support and resistance. So I'm sure you can see that we have an identification of our highs and our lows, our highs and our lows, our highs and our lows. Okay, so the only thing for us left here is for us to know, to identify the strong side of market and the weaker side of market. Okay, we can use a lot of confluence. You can put in your support and resistance, or rather supply and demand. You can bring in other concepts to make sure that everything agrees with you. Okay, so we have, this is the 1 hour time frame. So we have, as you can see, our highs marked in blue. I don't know if that's green, yeah, but whatever color that is. Then we have our lows in red. Okay, so you must know that wherever you see red, you must see break of structures, because we are having a trend to the downside currently. So we have our high there, another high, another low there, low, then we had a high here, then another low. This high got broken. We saw it get broken, and another high was formed. Then I'm sure you know what happened here. This was during NFP. So this is another, this was a news event that messed this all up. But I'm sure if you understand liquidity, you must understand that this was a liquidity grab. Market came back up to clear all this liquidity, to make sure that all the liquidity to this other side is taken before it continues to move in its actual trend. So we expect this market to continue moving in the actual trend, and knowing that this is just a phase of manipulation, you must know that, oh, okay, market must continue to move. So today we expect market to move down to cover up this gap. Okay, so I'm sure you can see that on this chart it's very much easy to identify your highs and your lows, your highs and your lows, your highs and your lows. Why? Let's take it to the 1 minute time frame. So yeah, if you can see, it's the same thing that we have here. From here you can see that market was trending. If you look from here, I'm talking about from here, so market was trending from what, a low to a high, low, okay, back to a high, low, to a high, low, to a high. Then we had a break of structure. That break of structure simply means that we must expect a change of trend. That change of trend, we saw this drop, okay, then we saw some consolidation here, then market pushed to the upside, then again market is pushing downwards. Okay, your understanding of swing highs, or rather highs and lows, is what is really going to help you understand your concept, your weak highs and lows, and also know where to trade from. We are trading from strength towards weakness. Towards the weakness, that is where our take profit lies, and our targets, everything concerning exits. All right, the strong side is where now everything to do with entries lies. So if you're looking for entries, proper entries in trading, especially under market structure, make sure that you add this concept to your entry criteria on your trading plan. Sure. So make sure to subscribe, to like, and let's grow together. Thank you.